All right. All right, guys, what is going on? Welcome to the live stream. Welcome to Wall Street Wednesday. Which I am changing to risk management for beginners and how to teach yourself. You guys good with that? Not that you have a choice, but are you good with that? And excuse me. I feel like being a little bit interactive today. So if you want to follow along, you should go to my Instagram. And you should go to my most recent post called Risk Management for Beginners. If you could, drop a like and a comment if you do find it valuable. I hope you do. If you do find it valuable, send it to a friend or two so they can get value as well. Really, they should be here. That's where they should be. But it's all good. So yeah, again, go to my Instagram. Okay. Risk Management for Beginners. That was posted about an hour ago. You know, give or take a few minutes. And we'll be going over that. And how to teach yourself. So, yes, while I can be your mentor and I can teach you things and you know, guide the way for you, what you have to realize is a lot of your learning is going to come by way of studying yourself, right? Studying your results, studying the market, and studying what you got wrong, what you got right. And I don't have the capacity to sit here and answer every single inbox that I get. If you have a question for me, ask our Discord. Okay? But for all of you that are on Instagram that send me DMs, please stop. Okay? I'm not trying to be rude. I'm not trying to be disrespectful. It's just, I can't do it. Okay? What's good? Eric, Julius, E, Slowly, Willow, Scott, G, Roberto, Sergio, Mark, Eberneth, Akil, H, Techno, Nicholas. How do I access the Discord? I only see 3 channels. You have to connect your Discord to your YouTube channel. So Discord user settings, connections, YouTube, sign in. What's good, Mason? So yeah, we again, if you want to follow along, we're on Instagram. Risk management for beginners, and I outlined like 11 ideas. I think it's 11 when I made it, or 15, I guess. Maybe the other one was 11 then. Anyway, let's dive in. Risk management. Risk management for beginners, anyway, because it does get more detailed than these, but for a well-rounded education, right? Multidisciplinary education. We already went over a bunch of technical analysis concepts. We have playlists on that. We did like mindset concepts, right? CMC core mindset concepts. We have a few videos on that. The only thing we really don't have is a video. Probably won't make it a series, but at least I want to do at least one video that covers risk management. And you know, that way I can feel a lot better about having that all together. So we have the triad: risk management, psychology, strategy. So that's why we're doing this. That, and I don't have anything else for you today. So, all right, number 1, drop a 1 in the chat if you guys are here and you're following along. Number 1, 1% risk per trade. Number one, drop a 1 in the chat, is 1% risk per trade. Now remember, this is risk management for beginners. This is not a, well, you know, I've grown my account 10% so I can increase risk to play with house money. We're not talking about that. We're not talking about that. Okay? We're not talking about compounding. We're not talking about after your account has grown. We're not talking about that. We're talking about very beginning, your first 2 years in trading until you know what is going on. 1% risk per trade. Okay? You can break that rule at your own peril. You don't have to follow the things that I tell you to follow. But again, it would be incomplete education if I did not give you what I think is the best way to go about being a beginner trader. What's good, Roger? All right. So why 1%? Because small losses keep you trading. Big losses make you want to quit. That's why most people do. You can size up later when you know what you're doing. All right. Number 2, drop a 2 in the chat. Drop a 2 in the chat. Number 2 is define the stop loss before entering. Decide where your stop loss should be before entering the trade. Be sure your stop loss isn't too small or too large. Now, I know that lacks specifics. It's not vague on purpose, but again, there's a lot of freedom here. There's a lot of ways to trade. There's a lot of models. There's tight stops. There's loose stops. I wouldn't recommend mental stops, but I guess that's a thing. You did see that in the recording yesterday, by the way. I put my stop in after we made the low risk buy. But I'm in year 12. Okay. If you're in year 1 or 2, I know what I'm doing. Okay. But as a beginner, I would have a stop loss defined before even entering the trade. Now, if you need help with this, if you don't know how to define a stop or like where to put your stop, I covered a little bit of that yesterday. Right? And there is a good, I think it's all good, but there's a video I did on stop loss placement, and a lot of it has to do with MMXMs, right? Market maker models. And so do you notice how everything that I teach you always comes back to this? Right? That's not a coincidence. Everything I teach you comes back to this. So for example, since the model, the stages, and the models too, but the stages are always in order, right? So one of the easiest things you can do, and you do not have permission to come bitch at me for having a wide stop, but one of the easiest things you can do if you don't know, and I'm giving you some keys here, whatever stage you're trading, most of you don't trade original consolidation. I don't. But whatever stage you're at, okay, your stop can go to the previous stage, high or low. Does that make sense? Drop a MMXM in the chat if you guys get it. I got one hand over here. MMXM. Okay. Drop an MMXM if you guys understand what I'm talking about. I'll cover it briefly, and then we can move on because I want to make sure we get everything done today. The only stage that otherwise would not have a stop loss based on a prior stage is the reversal. The reversal, you would have to defer to a higher time frame. Okay? But every other stage, okay, if you're shorting the distribution, stop can go at equal highs. Sounds crazy, right? Holy shit. John just said I can put my stop loss at equal highs? Well, yeah, If you're in a sell program, yes. But if you're short with equal highs, don't overstay your welcome. Okay? If you're trading redistribution, your stop can go to the high end of that distribution, aiming for liquidity. If you're trying to buy below old lows, if you're trying to pull a John Fib, okay, your stop loss in my entry kind of thing, yeah, defer to higher time frame. If you're trading the low risk buy, your stop can go to the manipulation low. If you're trading inside the first accumulation, it could go to the low risk buy, but be very careful. I would, depending on the range, like where you're at in the range, it might just be better to go with the manipulation low. That's what I did yesterday. You saw that in the video. You saw me put my stop actually a little bit above. No, it was at the manipulation low. When we finally went higher, I moved it above my entry. But yeah, normally it's going to be at that stop, the manipulation low. If you're trading the second stage, reaccumulation, again, you can find tight stops in there. But if you're not comfortable with that, then your stop can go to the low of the first leg of accumulation. Okay? So no, you won't have super high RR, but your win rate will be higher than whatever your mentors is. Except mine, obviously. I'm kidding. Sorry, I had to say that. Your win rate's going to be phenomenal. Okay? 70, upwards of 80%. Yes. Okay? But yeah, you will not have super tight stops. You might be able to find nice one-to-ones. That's not ideal. I wouldn't stay there. I would do that once in a while. But again, if you're a beginner and you don't understand, I would default to that. Previous stage low if you're long, previous stage high for short. But if you can't frame a one-to-one or better, then that's probably just not a trade worth taking. Okay? So there you go. There's minimal effort, bare bones, decent stop loss placement. Okay? It ain't perfect. You will take losses. But the win rate is pretty phenomenal. Damn. He just had to come in here and write a book. Gosh darn. Gosh darn, my friend. Shit. We got to take a break. We got to take 5. Take 5, chat. I started watching the core content and technical analysis. When you mentioned that when we have 2 selling or buying forward variables, what the fuck is that? You mean fair value gaps? I don't know what a forward variable is. I've never heard that before. That sounds like accounting. Accounts receivable, forward variable. I don't know. Don't know what that is. Let me finish reading. Below. Oh, shit. Always prefer one below and the one above, respectfully. My question is, if we place the entry at the beginning of the first imbalance, where we put the stop loss at the beginning of the imbalance above or at the end. Bro, you're overcomplicating it. Enter at the first one, stop at the second one. Oh, Google Translate. Okay, my bad. Sorry, I didn't know. My bad. Is it just randomness? It's never random, my friend. Price is never random. Never. It's never random. Listen. All right. This is like after hours in Asia. Not my favorite. I think it was Joe that had posted this as a sell model yesterday. And I think bro got out break even. It happens. So for an example, whenever we have 2 imbalances, okay? Now, we really don't have 2 here. We just have the one and that gap has to be included. So that's just it by itself, and an inversion as well, V-shaped reversal. We do have two here, right? We have one right here, and then that candle and that gap included like that. Okay. So when I commented yesterday, I think I commented. Shit, I can't remember now, dude. I might have dementia at 32 years old. It's possible. You don't know what they're putting in the water these days, chat. We don't know. We don't know. Okay. No, I didn't. Okay. It was just internalizing. Y'all ever done that? Y'all ever been so stoned before that you pull up to the drive-thru and they're like, "Oh, hey, you know, what would you like?" And then you think to yourself, "Oh, I want the #1 large with a Coke." And that's it. And then the ladies or the guy, whoever, the cashier's like, "Are you there? Like, are you going to order something?" Like, you thought in your mind that you ordered some shit, but you just never said it out loud. You thought it, but you didn't say it because your brain is so fried, right? Felix knows what I'm talking about. Mason knows what I'm talking about. Where's Mason at? You still here? Y'all know what I'm talking about, right? Where you and your homies are having a conversation and there's like 10 minutes of silence and then you finally answer his question. Like, what the fuck? You were just so in your head. And I do that sometimes. Like, in my mind, I'm thinking, oh, well, you should have traded the second stage of distribution. But I didn't put that in the chat because I was doing other shit. And so what I thought I said, and this is why I say that when I'm like, I don't know if I said this or not in the Discord, or if I said this or not in the market review, because there's a lot going on and I can't remember specifically if I said something or not. What I wanted to say was, you got out break even, but you should have traded the second stage. And so that comes in handy here, because with your question about the two imbalances, there's two right here, right? There's this lower one and this higher one. So anytime you have two like that in the same direction, of course, you take the lower one with a stop at the higher one. So the entry, yeah, the entry just probably would have been here. Like at this candle's high, 927.25. So 927.5 would have been the short. Right there. And then stop goes to that. Now, if you're trying to be cheeky, if you're trying to be like me, you're trying to do some gangster shit, yeah, I can go to just that imbalance here. But that is a tight stop. So if you go to the second one, it gives you a little bit more breathing room. And your lows are down here. And that gives you, oh shit, that's a long position. We don't want to do that. Yeah, disregard that. There we go. You don't want to be longing second stage distribution. Okay, that's the fastest way you're going to blow an account. There's your little 1 to 2. Bing, bing. See that? So hopefully that answers your question. When there's two, what do? If you're short, you trade the first one. Stop at the second one. If there was two on the way up, I don't really see it this way, but if you count that as one and you count this as one, again, I wouldn't do that because there's just all type of gappage in here. This whole thing is a suspension to me. But it's just for visual purposes. When you have two on the way up and it's trading towards, you know, something, okay, take the higher one, stop at the lower one. So that's it. It doesn't get more complicated than that. All right. I'm just catching up on the chat here, then we'll get back to it. It could be akin, but what's the difference? If you have 2 on a smaller time frame and you zoom out and it's 1 on a larger time frame, then it's the same shit. You're still trading the lower end. Ooh, excuse me. You're still trading the lower end with a stop at the high end. There's no difference. You're just going to be a little bit more precise when you enter on smaller time frames. I'm not teaching you how to be a normal trader. I'm teaching you how to be fucking elite. And I don't care what that sounds like. Oh, John's egotistical. Well, then fucking don't watch me. There's plenty of YouTubers. Go somewhere else. I don't care. They told us the total was 420 and we started laughing, the cashier. All right, capitalist, remind me later. I'll tell you a story about the first time I got stoned. I'll never forget it. This shit was too funny. What's good, Joey? If the stop loss is too great, between stages, do you have a certain point stop loss? You don't go above the NQ and ES. Yeah, if like, just eyeball it, bro. If you're not comfortable with that risk on ES or NQ, then go down to the micros. Simple as that. Thanks, G. I appreciate it. Bro said, I'm innocent. Get out of my chat. Get out of my chat. Nobody's innocent. What number were we on? Oh, number 3. Okay. We're on number 3 out of 15 and we're already 30 minutes in. All right, we gotta chill on the chat. Number 3, don't widen the stop loss once entered. You watch the market trade against you, and now you get worried that you'll get stopped out. You think about moving your stop loss away so the market doesn't hit it. This is not a good idea because it exposes you to even more risk. So, listen, out of all the trades that I've recorded for you, and I don't want to sound like a douchebag, but in all seriousness, it's not just, oh, he bought it here and went up here, or he shorted here and went down here. Okay, cool. Oh, that's awesome, John. And then you keep scrolling. Like, no, bro. You should look at, what am I targeting? Why am I targeting it? Why is that a stop loss? Why is that a TP? Why does he have a stop loss here and then he moves it here? Oh, shit, that gets close to a stop loss, but it doesn't hit him out. Like, these are the kinds of things that if I were you, that's what I would look at. And I'd go back into the chart like, okay, he said this was a ES 5-minute on this day. Okay, you know, let me go investigate. Okay, he was shorting this. Stop here or here and aiming for this, that, and a third. What does he see? Why this? Why that? Because I can hide certain things. Like, for example, someone asked me the other day, oh, where would the stop loss go? Because I had recorded that without a stop loss on. Because I can hide that. Like, okay, I don't want to show what I would do here. Because I'm not going to give everything out on my Instagram for free, you know? You got to come to the YouTube or watch the videos at least. Put some effort in. Right? But for when I do show you the details, that's what I would study if I were you. So you don't see me do that in my video. You don't ever see me widen the stop, I don't think. Okay? Drop a 4 in the chat if you guys are still here. I know we skipped number 3, but I'm trying to hurry up. Drop a 4 if you guys are still here. Okay, cool. You guys are quick with it. We must have a really short delay. There must be like a 5-second or less delay. You could probably tell if you looked at your NQ and the timer on the countdown of the candle compared to mine. It should probably be Very short. All right, number 4, asymmetrical risk reward. Asymmetrical risk reward. You want math on your side. Reward should be 2 or 3 times the amount of risk you put on. Example, risking $100 to make $300. Now remember, you can still take 1-to-1s, but you do not want to stay there, right? Some people on Twitter that are like, oh, 1-to-1 is the best RR. No, it's not. You never let winners run. So unless your win rate is absurdly high, where you can compound your account, yeah, that might work. But never letting a winner run, yeah, that's not the best. You're stupid. All right, moving on. Number 5, max daily loss. Max daily loss, number 5. Set a max daily loss limit. It could be, I put $2 instead of 2%. I got a little typo in there. I just now noticed that. It could be 2% or 3% as an example. If this limit is reached, you are done. Log out, walk away, do not trade anymore. Best to cut the day there than to keep it going and lose even more. So a lot of platforms are really good for this, especially Top Step X. The lockout feature is pretty solid. So that's pretty cool to me, at least. All right, number 6. You guys still with me so far? Drop a 6 in the chat. Trying to speed run some of these so we can get to some of the later stuff. Number 6, max number of trades. 2 to 3 trades should be maximum per day. Anything more and you risk unnecessarily. You don't need to take 10, 20, 30 trades a day. I think that's crazy to me. I wouldn't do that. The only way that I would take, more than a few trades is kind of like, what the fuck? Oh, sorry. I thought we were on the 5-minute. The only time where more than a few trades is acceptable is with what I showed you yesterday. Pyramiding. That's what yesterday was. Pyramid. I call it Christmas tree, but it's pyramiding, right? So these platforms will count each individual transaction as a trade. That I don't agree with. Okay? Because what I'm doing is building one position. And then I'm exiting multiple times, but it's still based off of like one market move. I want to buy down here and sell up here. It's one move. Does that make sense? So to say, okay, he bought 4 times, he sold 4 times, okay, that's 8 trades. I don't agree with that. Because if you really wanted to, you could just manipulate your own numbers and say, okay, well, I went in on a full position and lost. Okay, well, let me add 10 smaller positions and then exit at 10, of those same positions. Oh, well, now I have a 90% win rate because I won 10 and lost 1. But to me, that's just 2 different trades. You know what I mean? So anyway, 2 to 3 trades per day max. Anything above that, and you're going to risk getting your face ripped off. Number 7, this is a big one. Resist the urge to revenge trade. It's really more of a psychology, right? Like discipline, but it does affect your risk management. It does affect your risk, right? You take a loss and get upset. You want to enter again to get your loss back. We've all been there. Avoid the urge to enter right away. It's best to come back another day. I would work on that. Okay? I would seriously, like if I had to go back and be a beginner again, I would really focus on that. I would focus on my ability to walk away. Or at least the ability to not trade. I can watch the charts for 3 days straight. Equities open, AM session, launch, PM session, final hour for 3 days in a row and not trade. I can do that. I was always not like that. All right. So resist the urge to revenge trade. Number 8, reduce risk after a losing streak. Number 8, reduce risk after a losing streak. It's likely you'll eventually lose 2 to 3 or more trades in a row. That's normal. Instead of increasing risk to get it all back, consider reducing risk to avoid further drawdown. Many will ignore this warning, and you will pay the price. It's the opposite of martingale. It's inverted martingale. We don't want to increase risk. We want to decrease risk. Number 9. Drop a 9 in the chat if you guys are still here. We're getting a little bit more people on here now, but we're past the halfway point. We're in our second stage accumulation now. Oh, shit, I hit 6, dude. I'm at 9. Right? Hell, they look the same. Number 9, avoid dollar cost average. Adding to a losing position is a terrible idea. Adding to a winning position is far better. Did you see that in the recording yesterday? I bought multiple times near the low, but then I added one on the way up. That's how you add to a winner. Never DCA with leveraged positions. Yeah, slowly, I caught that. I'm not perfect. I make mistakes, all right? But never DCA with leveraged positions. You can DCA stocks. It's not a big deal. But DCAing with leveraged positions, not a great idea. Learned that the hard way. I'm working on it, right? But see, this is where precision comes in. If you're precise, you won't need to do it, right? If you can long down in here or down in here or down in here, like I was doing yesterday, there's no more going lower to then add down here. We don't need to do that. We're already getting one of the best available prices. Then we can just hold it, right? Instead of like I did in the 48 laws, you know, oh, you would buy that and then buy that and then buy that. Okay, well, if you don't understand your leverage and you're trading ES or NQ, you're done. You might as well just kiss that account goodbye because it's gone. So smart money does that. And we don't need to do that. They're going to buy on the way down. They'll buy it on the way up too and sell on the way out or on the way up to get out. But we don't need to do that. We can wait for the change in state delivery and then get in with buys for the buy program and need not take drawdown, or at least a lot of it. Okay. Number 10, partials always pay. Partials always pay. If the market offers you a higher high when you are long, it's a good idea to take something out. Pay yourself before you play yourself. Sure, you don't get the exact RR when you partial, but you do grow the account, and that's the entire point of trading. Okay? If you only have one contract, you won't be able to partial. You'd have to exit and then re-enter if you want to, you know, keep that going. But, you know, like I did yesterday, you can take multiple positions and then get out one, get out another one, and then get out the last one. Or, sorry, we had one more and then we got out for the last one on the way down. Right? You guys don't even realize the 48 laws of trading taught you how to Christmas tree this whole time. You just never noticed it because you never had somebody to sit down and tell you. But you've learned how to do this already. And that's one of my favorite things, is to just come on here and say, I told you so. I'm giving you information that you already know. You just didn't know what you could actually do with it. Many traders have other opinions. And yeah, you're allowed to have your own opinion. I like getting paid. I can't speak for everybody else. I don't mind getting paid. And then getting paid more later, instead of holding on the entire position, for those highs. Look what happened on Monday. This is why I streamed that for you as well. Remember I called out that short? Yeah, wick that bitch too. Here. Because this to me was a sell model. And then, yeah, we ended up having a lower low here and a lower low here. So there was multiple opportunities to partial. And depending on if you dragged your stop loss down at the wrong time, then you got stopped out in profit before the market actually went down to our target. So you might have taken a decent trade, but if you paid yourself and then got a break even, you would have done a lot better. So that's the thing. There will be times when partialing would have been the best option. There are times when holding all the way for the equal lows would have been the best. There is no one answer that will fit every scenario. There just isn't. It's impossible. There's too many variables to say that, okay, this is the one and only way of doing it. Do you understand? However, there's two sides to that coin, right? One side, hold everything for the TP. The other side, partial on the way. So the midpoint, to me, is partialing along the way. Because if you don't partial and then you get out break even, you don't make anything. And now you wasted your time. But the people that did partial at least grew their account. So why would you get into trading and then deny yourself the opportunity for growth? Mark Douglas himself said, when the market gives, you want to take. So, again, you can have whatever opinion you want. There have been times where you see me do it. Oh, yeah, I'll partial on the way down. You've also seen where I'm like, no, fuck a partial. It's going for those lows. And I'll hold all the way for the lows. Full pull. This is what that's called. Okay? And you see me do that. For beginner and intermediate traders, I would recommend partialing. Okay? Especially if you're doing a combine or a funded account. Because you want to grow that. You want to grow that. So you can either see it as, yeah, you're cutting yourself short by cutting profits. Or you could see it the other way. Well, at least my account is growing and not going in the red. So, you might disagree, and that's fine with that. If you want to just do full pulls, fine. But you better have good patience and you better be precise. Because we've seen instances where the market does pay and then comes all the way back. And that gets discouraging. And then you don't think market maker models work and you don't think macros exist. And, you just become retarded. I don't know what else to tell you. So that's my opinion. Partials always pay 100% of the time. All right, we got to hurry up. I yap too much. It's your fault. All right, number 11, journal your trades. Journal your trades. There's a quote from George Santayana. Those who cannot remember the past are condemned to repeat it. It's pretty self-explanatory. And I'll come back to this in a minute when I go over how to teach yourself. The journal is going to be one of the biggest things. All right, so number 11, journal your trades. Even if you don't physically write it out, at least take a screenshot. At a minimum, okay? Bare minimum, take a screenshot before and after, or at least after with a markup, okay? I would recommend actually writing stuff out or even drawing it like with a pencil if you'd like. But at a minimum, at least take a screenshot. All right, number 12. Drop a 12 in the chat. If you guys are still with me so far. We got a few minutes left. We may go over a few minutes. Hey, Kane, you're blocked. You're blocked. All right, number 12. Stop looking at the P&L. Number 12. Stop looking at the P&L. You see your profit and loss move. You get excited when you're up. You get nervous when you're down, or if the market goes against you. Focus on the market and your process. There's a couple traders that I do have respect for. Benjamin is one of them. He's a young kid. He's like 19 or 20. And there was a trade that he took the other day. And I can't remember where it was at. It was something that we also did. Man, I should have wrote that shit down. Anyway, and I'm not trying to be mean. And I've done this way more times than any of you can even imagine. But he had a really good trade. Right? Like he had the direction right. Really nice. And it was something like this, maybe. And like this was the break even or something. It wasn't this setup, but it was something close to that, where it's like you had the direction right, you had no drawdown, but the market had came back like with 1 or 2 candles and then took off. And he was like, oh, 2 break even on the day or something like that. And that's when I was like, okay, yeah, you fucked up, because that break even was so quick. It was way too quick. And I know that because I've done it a lot. A lot. Okay? Whatever number you're thinking that I've taken like that, whatever number you're thinking of, double it. That's how many times like I've gone break even too fast. Okay? So don't do that. And I think a lot of us do that because we're looking at the P&L, or we don't want to lose. Okay? You got to stop trading to not lose. Trade to win. Do you understand that? Trade to win. Don't trade to not lose. If you trade to not lose, that's what you're going to do. You're going to go break even too fast. Okay? It's not about like the outcome. The outcome is going to take care of itself. You have to focus on the process of that. So if your process is, okay, leave the stop down there. Once we do get, order flow, okay, now you can move your stop a little bit. Or once we start to take off here, okay, the stop can go to this low now. Okay, now we're at a macro and we're fixing to wreck those highs. Okay, now I can take my stop and, jam it way up here. So now I can lock in a gain, so on and so forth. Okay. The P&L is not good for beginners, or if you're like really sized up. You're looking at $100 up or down every couple of seconds, like that. You might not be able to psychologically handle that. Instead, you can focus on the market. Okay, well, my plan says to hold for this. My plan says to keep the stop here, partial this, do that, whatever. So you have to be process oriented, not outcome oriented. I'm pretty sure that's in here too. Number 13, avoid trading if you're distracted. And by distracted, I don't mean like social media and like multitasking or something. That is a thing, but I'm more so referring to like emotion, like you're emotionally distracted. If you're angry, tired, I'm tired all the time, but angry, tired, depressed, if something's on your mind, like a dentist appointment, oof, we don't want that. It's best to just take the trading day off. Come back when you can actually focus, because if you can't focus, you're more likely to take stupid trades. Okay, so that's number 13. Avoid trading if you're distracted. Number 14, it's real easy. Check the economic calendar. Don't enter trades before news like CPI, FOMC, interest rates, so on and so forth. And I threw this in here at no additional charge. Avoid the AM session after a large range day. If there was a massive day on Wednesday, like CPI or something, Thursday AM session, probably best to skip. All right. And number 15, think risk first. Always consider risk first, profit later. Setups or ideas that don't pass the initial risk assessment should not be taken. And that's all 15 for you. 1% risk per trade. Don't widen the stop once entered. Asymmetrical risk reward. Max daily loss. Max number of trades. Resist the urge to revenge trade. Reduce risk after a losing streak. Avoid dollar cost average with leveraged positions. Partials always pay. Journal your trades. Stop looking at the P&L. Avoid trading if you're distracted. Check the economic calendar and think risk first. Did you guys get some value out of that today? Drop a, it was 15, right? Drop a 15 in the chat if you guys got some value today. Most of this is beginner stuff. Most of this you should already know and be aware of. But sometimes we got to go back to the basics. Sometimes there's new people here as well, or there's new people on the stream. I mean, I did get like 3,500 followers on Instagram in the last 3 weeks, 4 weeks. A lot of new people. They may not know. They might not know. So yeah, again, if you could on Instagram, leave me a comment. Share it with your friends. Say, hey, stop blowing accounts, bro. Here's some rules to follow. It's probably better if you send a chart. AK. Yeah, I'm not really sure what you're asking. It's a little confusing here. This is the buy side of the curve. After manipulation, okay, this is how it works. Okay, if you've never seen this before. Oh, and the vertical recording was goofed. Oh, I fucked that up. If you've never seen this before, this is how it works, okay? Let me go back to this. There is the sell side of the curve and the buy side of the curve. Now, the inverse is also the same. Meaning, if we have a sell model, it's the same thing. We have the buy side of the curve and then the sell side of the curve. So in a market maker sell model, you need the buy program first, then manipulation, then the sell program. So you have the consolidation, and then this is our buy program. Once we get manipulation, now we're in a sell program. So I think the 15-minute is a little bit high for entry. And I don't know if that's the imbalance you're referring to, or maybe if it's like this inversion, right? Like it's ripped through and then ripped through again. It becomes reclaimed here, though. So I don't know if that's your question. Yeah, I'm not really sure I understand your question, brother. because the terminus for that would be these lows, and that was met that same day. So I'm not really sure what Tuesday has to do anything with it. What about today's price action? Because it screamed market maker sell model to me. No. And we need to take the session breaks because that's really tossing me off. Okay. Look at Dow. See these highs in here? So we had a low from Tuesday, the 12th, and the 19th took that out. Today's equities open, went down there, souped. Then we got our lowest buy, first leg, and we really don't go back into a discount just like yesterday. So this was a buy model on Dow Jones. A very distorted model as in like the timing distortion. Because those highs are here. That high is in London. So you have London's high up here as well. And we really don't get manipulation in the electronic side. But we do get that in the regular side. So this was a buy model on Dow. The other indices, I don't know. I wasn't really up for this. But remember, you got to look at both. You got to look at both regular and electronic. I didn't mean to do that. If we go to the daily, right? Look at yesterday's candle. See that down candle here? Just like I went over this already yesterday. We took out that low here. I just realized I didn't have a mouse on this whole time. See that? That was taken there. So while the market can continue lower, it could. It doesn't do that. Okay. And for NQ, even better, honestly, you have a gap from Wednesday the 6th and Thursday the 7th. How far can price go below a low? The next available inefficiency. You've known this for a while. See that? What's that candle's low? 663. That gap is 662 and 3/4. So I told you this stuff gets really fucking precise. But if you believe in supply and demand, you won't be this precise. It won't happen consistently anyway. But we got that. Today, same thing. We're in regular trading hours, by the way, for NQ. In case you can't see that. If we take everything off here, there's our Tuesday close. Here's our Wednesday open. When price is bullish, we want to see it stay in the upper half, right? Does it stay in the upper half? Mm-hmm. So that's not bearish. What is it going to reach for? I have no clue. I mean, I'd like to see some sort of, clean highs or something, but we don't really have that. We just have other gaps that it might want to reach for. So there's your top down in, really quickly. It's just what's on the higher time frame. Right? So we hit a higher time frame discount, and now we already traded lower, a couple of days. So expansion higher, not a sell model lower. But don't beat yourself up, man. This stuff is easy to me, but I've been in front of the charts for like 7 or 8 years straight. So it's natural to me. But if someone were to come up and start speaking Mandarin to me, I would not know what they were saying. They could show me the letters and all that shit. They could show me stuff. It would take me a long time to understand Mandarin. I mean, it would take me years. There's no way I could learn a language in a year. There's no way. There's too many words. There's too many nuances and all that stuff. It's foreign to me. Right? Market maker models are foreign to a lot of people. And I'm trying to find it. And, people are induced with supply and demand concepts. They're induced with indicators. They're induced with support and resistance, with trend lines, with all this stuff. And they do not get introduced to something like this. That's more accurate. It's more precise. Your win rate will skyrocket immensely if you actually follow this. Okay? So wherever you're at, I don't know what you know and what your experience is, but to be able to understand, right, 7 stages, multi-time frame analysis, relative strength, stuff like that, it is a lot of information. It's only secondhand to me because I live and breathe this shit. You know what I mean? And that's why I show it to you so much, though. I'm purposely trying to rewire your brain to see this and not the other shit. So, it's cool to get it wrong. You will get it wrong. I get it wrong sometimes too, and I'm in my 12th year. So don't be discouraged because you're in year 2 or 3 and you get it wrong. I get it wrong. I'm in year 12. Okay? I try not to get it wrong. But it takes practice. Okay? And that's a really good segue into the last thing that I want to tell you today. How to teach yourself. Okay? I can teach you a lot of stuff, of course. Why do you think you're here? But again, nobody will teach you more, including me. Nobody will teach you more than the market itself. Your journal will be your greatest asset. Okay? So what you have to do Jesus. It's why I can't multitask, chat. I got crazy shit. What was I saying? Oh, being self-taught. You have to document your journey. You have to, if you're not going to print charts, at least screenshot them. You need to write down what you think. I think this is a sell model because of da-da-da-da. I think this is a buy model because of da-da-da. I think the market's going to trade here because of this or whatever. I don't know. Blah, 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 blah. Okay, now watch this. Here's a big key for you. You ready? Think about everything that I've given you. Think about everything that I've given you. All the models. All the concepts. Right? And if you, I know, I think Willow said this before, but if you simply, after you watch pretty much all of my content, to go back and watch the heavy hitters playlist, the 48 laws of trading, that's free and public, But the obstacle is the way, the mindset masterclass and the market maker models masterclass. Both of those are member only. But you can reference the 48 laws of trading in your own studies. John, I got it wrong. What did I miss? Go look at 48 laws. John, I got it wrong. What did I miss? Go look at the market maker models masterclass. What do you think you got wrong? You got stopped out at the low? Right? Okay, you got stopped out at the turtle suit. What could you have done? Re-entered. What could you have done? Waited for manipulation. You could have waited for a crossing of 50%. Right? You could have waited for an inversion. You could have waited for the V-shaped reversal retracement and then get in on expansion. There's so many things that you can literally teach yourself based off of the information that I've given you. You don't have to ask me directly. If you need to, yeah, go into the Discord and ask. Because I'll answer a question that's public so everybody can get value. But these DMs, one-on-one shit, don't fucking do it, man. Okay? The only person that would get value is you. And I don't want to do that. Okay? So, like you said, right? What about today made it, go higher because you thought it was a market maker sell model? Now I'm doing you a favor by showing you what I would have done if I got it wrong. I didn't trade today, so I didn't get anything wrong. I didn't get anything right, but it's just, I'm giving you the answer as if it was myself. Okay, John, you tried to short. What did you get wrong? And that's why I'm showing you the very same things that we do all the time. Go through regular, go through electronic. Electronic might not have what you're looking for. The Dow is shit stain anyway. But regular trading hours has clean highs up here on top of that gap. So the Dow might want to trade higher. And if it is going to trade higher, it's going to go lower first. And it does go lower at our open. Right? So that's an opportunity. That's an opportunity. This little imbalance right here is an opportunity. That's an opportunity. That's a mitigation right there. Right there. See that? We trade through it. Back into it right there. Bang. You see what I'm saying? So this comes back to the checklist. You know I've been talking about that the last 6 months as well. Mental models and checklist. What's your entry criteria? What are you looking for? And if price, you're looking at price and trying to interpret it, if you can't interpret it, there's no trade. Because remember, we cannot force something to exist that isn't there. I can't do it. You can't do it either. None of us can. The market is what it is. And we have to interpret what the market is likely to do. We have tools. We have many tools. Use them. So when you get it wrong, figure out what you did wrong. Did you miss higher time frame? Did you miss entry? Did you get in too early or too late? What is the case? And we're not looking for perfection here, but we are looking for progress. We're not looking for perfection. We're looking for progress. So that's how you teach yourself. You have the laws. Hell, I gave them out on my Instagram for free. Maybe not all the specific there's no charts, but the laws themselves, right? Almost 6,000 likes, 8,000 shares. Look at that. The 48 laws of trading. I literally gave it out. I give this stuff away. Use it. All right. So with that, that's going to be it for risk management for beginners and how to teach yourself. You guys have any last minute questions before we hop off? I know it's been a long stream. It's been a little over an hour. I know it's been a while. But do you guys have any last minute questions before we hop off? Because I'll do a market review tomorrow on Thursday. We'll have a member only video or live stream on Friday. And then the next free live stream will be on Monday. Oh yeah, capitalist. Thank you for reminding me. Yeah, the first time I got stoned, and I was like, I think I was like 17 or 18. And I didn't just like, get stoned. I mean, like we smoked a lot. So we ended up going to Sonic. And I don't know why, but we're trying to order and it gets to my turn and I pull out this coupon and I don't know, for some reason, like having this coupon was the funniest shit ever. And we laughed so much that the lady on the like who was trying to take our order actually stopped and took another person's order because we were taking so long. And I think I almost threw up because of how much, like how funny this shit was over a coupon. Like, I don't know, it's just stupid. And we ended up getting a bunch of shit, dude. I got like ice cream and cinnamon sticks. I would take the cinnamon sticks and dip them in the ice cream. It was amazing. It's the best food I ever had. But yeah, that was like the first time I ever got stoned. So it's not that crazy. It's not that crazy, but you just don't expect certain things to be funny, you know? Like, why was that so funny that I had a coupon for Sonic? You know? So, all right. Good times. Y'all be good. Be blessed. I'll see you guys again on Friday for the next member only stream. And if you're a freebie, I'll see you on Monday, the 25th.
Sun is rising, close my eyes and I'm just riding with you. Above us, just fly away into the sky. Forever and we are higher, flying like a bird. My desire is just to be with you.